You are listening to chartingwealth.com for Tuesday, the 14th of August, 2018. We see everything down for the day. Gold down the biggest. Do want to thank everyone over the weekend who purchased our book and our trade worksheets, our actual trader's journal. We have the worksheets in there and the trade worksheets. That's the daily market, the weekly market, and your trade worksheets for you to practice. Thank you so much to everyone who's supporting the channel and our work that we put out here for you free every day. We so appreciate that. If you're interested in purchasing our book, Charting Your Way to Wealth, to understand what it is we do here, or our trader journals to accelerate your training, there are links in all the show notes to where you can do that. There's also videos that show you what the book is about and what the trader journal is about and how to use the daily market worksheet, the weekly market worksheet, and the trade worksheet. We actually have tutorials on all those things. So thanks again so much for your support and help. Let's jump into the S&P 500. We, of course, always start on the weekly chart. What do we see going on? Well, this week is starting off slow. Now, we have literally 5 prior weeks of strong up movement after we had a crossover going up on the week ending the 13th. We actually had sort of a bounce off the red signal line. We'll count that good enough for a weekly vertical crossover going up. And of course, what have we seen happen? Well, we've had up movement for those 5 weeks ending at the end of this past week. Now, so far, we're pushing through. We're sitting right on top of the weekly trend line. It is a red open box candle. It's not a solid candle, so things could change. They could turn around. It's only the first day of the latest 5-day candle, and you don't call a candle until it's drawn. All those rules are explained in our book. What do we see happening, though, with the price percent oscillator? We see it actually starting to move down. It's at least flat, and we see the derivative oscillator losing energy. Now, that can change over the course of the week. It's not a solid red candle either. It's a red open box spinning top, meaning indecision at this point, tending down. But again, something to keep your eye on. The first time that has happened in many, many weeks. Is the market topping out finally? Don't know. We'll keep our eye on things. What have we seen happen lately with the 2-day candle? Now remember, that latest 2-day candle ended on Friday the 10th. This is only the first day of the latest one, but it is a strong red down candle sitting right on top of the 2-day trend line. Again, it's not complete. It's just the first day of the latest 2-day candle. Price percent oscillator's heading down. Derivative oscillator is almost going over to the red. Hasn't happened yet, but it's been losing energy since it topped back on the 2-day candle ending on Wednesday, the 25th of July. So even though the market moved up since that point, we really had a divergence happening as far as the price percent oscillator, the derivative oscillator losing energy as the price went up. So keep your eye on things as the week goes on, and we shall continue to watch just what's happening in these charts and where it goes. What do we see going on the 4-hour chart? We see, of course, it crossed over in the morning on Friday the 10th and has continued to trundle down and head down. Now, that could be the sign that the market's topped out. If it's strong enough, it'll pull the 2-day over and then the weekly. So we shall watch and see what we shall see. Hopefully, those of you who jumped in rode that wave. We started talking about concerns about it rolling over and heading down. So we'll keep our eye on things and see what we see as this market moves along. Okay, from the 4-hour to the weekly on the Qs. And then what do we see going on QQQ? That is the Nasdaq 100. Now, it was down for the day 0.11%. Oh, and by the way, S&P 500 down 0.37%. So what do we see going on here? Well, it's a green open box candle. We see the derivative oscillator heading down a little bit. Price percent oscillator is about flat. That's the way the week started on the Q. So not as down as we saw with the price movement and the Heikin Ashi candlesticks and the indicators. As we saw on the S&P 500, we go from the weekly to the 2-day, and of course we see that 2-day sliding sideways. We have a doji forming. It's already been in the negative on the 2-day since the 2-day candle ending Wednesday, the 2nd of August. So we'll keep our eye on things. Price movement still above the 2-day trend line. So I'm sorry, the weekly trend line. We have now had things move over on the 2-day, and we will start drawing that again soon. We actually have a line that we can draw. And then we go from the 2-day to the 4-hour. What do we see going on there? Well, of course, 4-hour crossed over going down in the morning on Monday. That was after the prior day on Friday was a big down day. Didn't cross over, however, until Monday morning. So we'll continue to keep our eye on the cues. Of course, we look at that weekly, and we see that the weekly's up, the 2-day is down, the 4-hour is down, and we shall wait and see if that strength on the 2-day and the 4-hour is going to be enough to pull that weekly chart over. Still hasn't happened yet. We may be seeing a topping. We just don't know. And again, we're trend followers, and we have to have a trend first to follow. Then we'll follow it to profits, God willing. Okay, let's move from the stocks. We will now go into bonds. Bonds down 0.21% for the day. Now, bonds are in a confirmed up move still on the weekly chart. That weekly chart, still the price percent oscillator, which is what confirms whether or not we're in an uptrend. It is still positive. However, the derivative oscillator is negative. So price percent oscillator is positive, derivative oscillator is negative. We ended the week on the 10th, Friday the 10th, was a green spinning top. That means indecision, tending about after 2 strong down weeks, but not enough momentum to pull the price percent oscillator over, although the derivative oscillator did flip over to the negative and has gained energy so far just the first day of this week. But as we continue to watch things and go from the weekly chart, which again is a green up candle, and the price percent oscillator is still positive, to the 2-day, we see that we had that prior 2-day candle ending on Friday was an up candle. The derivative oscillator losing downward momentum. Price percent oscillator heading up, hasn't crossed yet, but of course is blown through the downtrend line on the 2-day. And so far, this latest candle, first half of the latest 2-day candle, is also heading up. So we'll keep our eye on things as far as the TLT 20-year bonds go to see if indeed there's going to be enough power to rotate that 2-day chart in the same direction as the weekly. And if that be the case, might give us a jumping in point sometime this week. What's going on the 4-hour? Well, you see the 4-hour peaked out on Friday afternoon and then opened up somewhat down on Monday and then up in the afternoon. Still hasn't reached where it was back on Friday. So keep our eye on things. Derivative oscillators gaining upward momentum. Price percent oscillator heading up, but not at the same clip it was on Friday. So we'll just continue to watch and see what these charts bear out. Are bonds going to flip back over and start going up? They might. Haven't yet, but we'll keep our eye on things and see if that occurs over the course of the week. Now, gold. Remember, gold has been heading down for weeks and weeks and weeks since it crossed over, going down back on the 27th of April. Actually, it had already been in a downtrend since all the way back on the 16th of March. But it had headed up for a few weeks and then started really chugging down with a strong red down candle on the week ending the 27th of April. Since that time, only 3 up weeks. And so far, this week starting up strong down. However, the derivative oscillators lost a little of that downward momentum, but that price percent oscillator is still chugging down. We go from the weekly to the 2-day, and of course, the first day of this latest 2-day candle, big, strong down move, punching through. Thought maybe things could have been bottoming out around the 114.75 mark or so. Not the case. Bounced off and headed down strong on Monday. And of course, we can see that really come to fruition as we look at that 4-hour chart. And of course, for that strong down move, we told you just to keep watching that. Price movement never bucked above that 2-day trend line and really bounced off. If you had been watching that pullback, of course, your jumping in point was in the afternoon on Monday for a real nice down move, jumping into that, seeing how far gold is going to go, because it really, after that pullback, has hammered down. Now again, remember, you don't have to always go by the 4-hour chart, but all trends change starting with the 4-hour chart, but they don't necessarily change. Just because the 4-hour chart crosses over going up or down doesn't mean that the 2-day and particularly the weekly are going to change. That's why it's all the charts all the time, and that's why practicing is so important, so that you learn like the back of your hand how these charts work, each of the 4, the S&P 500, the Nasdaq 100, 20-year bonds, and gold, so that you can read them. You know the time of year, you know their personalities, how they react and act, the quirkiness of it. And of course, we're heading into that beautiful fall-winter trading zone where the moves tend to be stronger and longer coming out of the summer doldrums. My friends, that's where we are as we end the day on Monday, going to Tuesday the 14th. God bless. All the best from the whole team here at Charting Wealth World Headquarters.